In this video, I'm going to go over the electric vehicle tax credit, what it is, how to get it, and what it covers. At the end of the video, I'll also answer some common questions about the electric vehicle tax credit. For many people, electric vehicles can be too expensive. With this in mind, the electric vehicle tax credit was created to help bring down the cost of purchasing an electric vehicle. There's a lot of confusion out there about what the electric vehicle tax credit is and how you get it. Part of the confusion is because the requirements recently changed and they're not yet fully complete. The electric vehicle tax credit is a dollar-for-dollar reduction on your federal income tax. This means if you owe any federal income tax, you can use your electric vehicle tax credit to pay some of or all of what you owe, depending on how much your tax credit is and how much you owe in taxes. If you don't have any federal income tax or don't have enough federal income tax, you may instead be able to get the credit as a refund, which I'll go in more detail about in a moment. In order to qualify for the tax credit, there are different requirements the vehicle must meet, and there is an income requirement you must meet as well. The first requirement is that any electric vehicle must be assembled in North America. If you're watching this video, this requirement is already in effect, so any vehicle assembled outside of North America no longer qualifies. From here, the requirements for a new vehicle and a used vehicle are different. Starting with the requirements for a new vehicle, you can qualify for up to $7,500 for a new hybrid or electric vehicle. If you purchase an electric vehicle from now until the start of 2023, you would qualify for more of the tax credit the bigger the battery capacity. For a qualifying vehicle, you would get $2,917 plus an additional $417 for each kilowatt hour of battery capacity in excess of 5 kilowatt hours, up to $7,500. This means even an 18 kilowatt hour battery would max out the credit. This also means nearly all electric cars on the market today until the end of 2022 will qualify for the full $7,500 as long as they are assembled in North America. Hybrids typically come with a smaller battery, so at $417 per kilowatt hour, they may not qualify for the full $7,500. Starting in 2023, the tax credit is instead going to be split into two parts worth $3,750 each. You can get one or both of these parts depending on whether or not the vehicle qualifies. The first $3,750 is based on where materials used to make the battery come from. The requirement is any vehicle placed in service in 2023 must have at least 40% of critical minerals come from countries in North America, be recycled in the US, or that have a fair trade agreement with the US, of which there are about 20 countries. In 2024, this requirement increases to 50%. In 2025, 60%, in 2026, 70%, and in 2027, it must be 80%. Also, by 2025, any vehicle with any amount of metals extracted, processed, or recycled from entities of concern will no longer qualify. Since most batteries and the materials to make them come from China, who does not have a fair trade agreement with the US, most electric vehicles won't qualify for the credit even if the actual vehicle is assembled in the US. The second part, or $3,750 of the tax credit, focuses on where the various battery components are assembled or manufactured. For vehicles placed in service in 2023, at least 50% of the battery components must be manufactured in North America. In 2024, the requirement is 60%, in 2026, 70%, in 2027, 80%, in 2028, 90%, and in 2029, 100%. So here again, many electric vehicle models will need to change where their battery components come from in order to qualify. If your car meets only one of the battery requirements, you could still qualify for half the total tax credit worth $3,750. So if you owe $3,750 or more in federal income tax, you'll be able to use the credit to eliminate or reduce your federal income tax. If you owe less in federal income tax than what you qualify for, there is a chance you could earn any remaining amount of the tax credit as a refund. Now, I've read through the actual Inflation Reduction Act bill, the summary of the bill, and the amendments to the bill. It seems the tax credit is in fact refundable for new and used vehicles. As the details of the bill are finalized, it will become more clear. Just be sure to check with a tax professional and with the dealer on what to expect before signing anything. If the tax credit is refundable and you only owe, let's say, $1,000 in federal income tax, and you qualify for $3,750, you can use your tax credit to pay the $1,000 of income tax and get the remaining $2,750 as a refund. If the tax credit is not refundable, you would only get the $1,000 reduction of your federal income tax. The tax credit is available until the end of 2032, so you have many years to take advantage of the credit. Starting in 2024, you'll be able to get the tax credit upfront from the dealer, so you won't have to wait until tax season to get the credit, so it can directly lower the cost of the vehicle when you buy it. In addition to the 2 battery requirements, sedans must have an MSRP of $55,000 or less to qualify, while trucks, vans, and SUVs are capped at $80,000. All of this applies to hybrids as well, as long as the battery is larger than 7 kilowatt hours and it has a plug. Also, certain manufacturers were previously excluded from the tax credit because there was a cap on the number of vehicles each manufacturer could sell and have the buyer receive the tax credit. This meant cars sold by Tesla and GM no longer qualified for the credit because they've already hit this cap. However, since the cap will be removed and Tesla and GM are made in the US, they will once again qualify for the tax credit in 2023. At that point, in order for them to qualify for the tax credit, they will need to meet the requirements for the battery as well as MSRP. The income requirement you must meet is based on your Modified Adjusted Gross Income, or MAGI. This is the amount of income you receive after certain adjustments and deductions. If you file your taxes as an individual, your Modified Adjusted Gross Income cannot be more than $150,000 per year in order to qualify for the credit. If you file jointly, however, the cap is $300,000 per year. And if you file as head of household, the cap is $225,000 per year. If you exceed these limits, you won't qualify for the tax credit. Since new vehicles are often still too expensive for many people, used cars will be able to qualify for the tax credit as well. Starting in 2023 until the end of 2032, you can get a credit of 30% of the cost of a used vehicle up to $4,000. Luckily, the requirements for a used vehicle are a little bit less complicated than a new vehicle. The vehicle cannot cost more than $25,000. The vehicle can be made anywhere, not just in the US. The vehicle must be purchased from a dealer, so it cannot be purchased from an individual. The vehicle must be at least 2 model years old, and a vehicle can only qualify for the tax credit once. So if a certain vehicle has been sold multiple times between 2023 and 2032, only one buyer can get the used tax credit for that vehicle. The requirements for you for a used vehicle are: you cannot be the original owner of the car, you cannot be a business, you can only qualify for the tax credit on a used vehicle once every 3 years, and you must meet the income cap for used vehicles. If you file your taxes as an individual, the cap for used vehicles is $75,000. If you file as head of household, the cap is $112,500, and if you file jointly, the cap is $150,000. If you make more than these limits, you won't qualify for the tax credit. One thing to keep in mind is that even if you typically don't owe much in federal income tax, or you normally get a refund, you still may have paid federal income tax. For many people, your employer has been collecting federal income tax from your paycheck throughout the year. So even though you don't appear to owe anything, you have been paying federal income tax, so you would be able to use the tax credit. Here are some common questions about the tax credit. Will I qualify for the tax credit under a lease? If you want to lease an electric vehicle, you will not qualify for the tax credit since you don't own the vehicle. The dealer may be able to give you a lower monthly cost based on the lease. However, these are the details you'd have to go over with the dealer and have in your contract. What happens between now and when the new electric vehicle credit goes into effect in 2023? If you ordered an electric vehicle before the bill passed in mid-August of 2022, you'll still be able to take advantage of the old version of the tax credit based on the battery's size. This also means it doesn't have to be made in North America. However, that version of the tax credit was not refundable, so you may not earn the full $7,500 if the battery capacity is not large enough. You can decide which version of the tax credit to go with based on what works best for you. If you purchase an electric vehicle anytime after mid-August of 2022, the vehicle must be made in North America but does not have to meet the battery requirements until 2023. Once again, you can check the article below to see which vehicles qualify, as well as how much you can expect to get for each vehicle. If you want to learn how the environmental impact of electric cars compares to gas cars, check out this video next. If you want to know how electric vehicles compare to gas vehicles in terms of their overall costs, driving range, and so on, check out this video next. Otherwise, if you found this video helpful, don't forget to hit the like button and subscribe to our channel. Thank you for watching. I'll see you next time.